With that, let's talk Apple. We've got a very special guest to help break down the report, tell you what to do. Jim Cramer joining us from outside the New York Stock Exchange, where he's getting ready for tonight's special edition of Mad Money. He's got quite a setup out there. Jim, thanks for joining us. Looks like Wall Street is embracing these numbers, especially guidance.
I think these people down here are chanting Apple, Apple, Apple. And I think what people like, frankly, is that if you have to back out this number, I know you back out that number, but what really you get down to as surfaces is that you could argue on a constant currency basis, it's even higher than the range that is where Katie Huberty was the top person. 16, 17%. You're talking about wearables and services amounting to being a Fortune 50 company. The smallest company in Fortune 50 is about a $62 billion company. Still not enough to please those who say it's only a cell phone company. But I think a lot to think about going down the pike, particularly with the credit card right on the horizon.
Yeah, Jim, it's going to be really interesting to listen to hear what they've got to say about the credit card on the earnings call. But to your point on the wearables, still small, but growing at 50%. Services, perhaps fractionally disappointing compared to guidance, compared to expectations?
Well, you did have a one-time gain last year that you're lapping, and you also did have a big currency, let's say a big currency swing. I mean, I could understand if you just use currency, you could probably get about 15% increase, but I say you could, it's a little fungible, I know, but the idea that it was going to be at 12, where Tony Sacconaghi, which is kind of the most tepid bull in history, thought it might be, that didn't happen. So I think the analysts are going to back out and do some of the calculations that I mentioned and try to hit, be able to guide 16 to 18, which again is very good considering the size of it. You're right about wearables. It's off a low base, but everything that starts is hit off a low base when it begins. And that's how I view this quarter.
Jim, I want to ask about the show coming up. You're outside, of course, for it, partly because you're grilling some burgers. What time exactly is that? Because I might try and swing by when you're cooking up some burgers.
Let's see. I'm not just doing burgers. I might be doing the Beyond Meat lasagna. I had some Beyond Meat short rib tacos the other day. There's a lot to explore here, Wilf. But we are certainly going to take up the concept of a stock that was supposed to crater, and I don't see it cratering. Now, was it as good as David Taylor talking about Procter Sarah? What a fabulous interview. Thank you so much for getting him, because that was the kind of fired up story that people should be in, that these people behind me are caring about. But yeah, Beyond Meat should have been down much more if it was a total phony. It's not. And so, Wilf, I don't know, maybe 6:15 if you want to stick around. I don't have my usual G&T for you.
I mean,